As you've heard from my career, I've spent my career in and around the business world at the CBI, then London Business School, then British Airways. And when I was on the Monetary Policy Committee, one of the things I enjoyed most was talking to business audiences and visiting individual businesses. It's one thing that the MPC does quite a lot of. And another thing that struck me during my time on the Monetary Policy Committee is how interconnected the UK is with the global economy. So I want to talk about UK and global recovery prospects. I know many people in this audience, or the bulk of this audience, are really focused on the UK domestic market. But because the UK does have so many links to the international economy, our economic cycle is quite strongly influenced by what goes on in the rest of the world. And so that's where I'm going to start with my presentation today. Also because over the summer months there's been growing concern about the global economic recovery, and so I want to first talk about those global growth concerns. And then I want to look at the progress of the UK recovery. And actually I take a slightly different view to Vince Cable, the business secretary, who seems to draw his inspiration from Private Fraser of Dad's Army, saying we're all doomed. I draw my inspiration from rock music. Those of you who've seen some of the speeches I gave when I was on the Monetary Policy Committee, Mervyn King, the Governor of the Bank of England, tries to get a lot of sporting analogies into his speeches, and I tried to get some rock music references. So we were talking in the bar last night about the Beatles, so I thought Here Comes the Sun might be an appropriate metaphor to counter Vince Cable's speech yesterday. Or perhaps Let It Grow by Eric Clapton from the album 461 Ocean Boulevard. I'm going to take a slightly more positive view, not because I want to argue that everything's coming up roses, that's not the case, but there is still a recovery going on, even if its pace and progress is a little bit uncertain. And then talk about economic prospects for the UK and Europe, and then draw out some key messages for business. So let me start with the first of those topics, the global economy. Now this is how the global economy looked 3 months ago when the IMF did its most recent full forecast in June, and they're due to do another one next month, so they will update this. But the striking thing about this chart is that it shows that the world economy rebounded really quite strongly from the recession in 2009 and actually returned to a rate of growth which is very similar to the rates of growth we saw in the mid-2000s. In fact, 2010 and 2006 and 2007 are only 3 years in the last 3 decades in which the IMF measure of growth across the world economy exceeded 5%. Obviously a lot of growth was taking place in Asia, the Asia-Pacific region and emerging markets. Western economies didn't grow that strongly, though they did start to recover last year. And actually in June, which is only a few months ago, the IMF were forecasting that growth this year and next year would exceed the average that we saw in the run-up to the financial crisis, the 2000 to 2008 average, which at face value seems quite surprising given all the negative news that we've been hearing about. But I think it's important to show that because that puts in context the slowdown that people are talking about in the global economy. It's a slowdown from a strong rate of growth, and if prospects are looking weaker now for 2011 and 2012, it is coming down from the expectation that actually growth across the world economy was expected to be pretty strong. Well, the IMF haven't done their update of their forecast, but I've done my own version based on the Economist's consensus forecast. And you can see that the yellow line shows the history and what was expected the yellow line shows what the IMF were expecting in April 2011 for what I call the G13 economies. That's the EU, the US, and the 11 other largest economies in the world. And these 13 economies account for about 85% of world GDP. And you can see how the consensus forecasts have moved down by about 3/4 of a percentage point from the position that we saw in the last IMF forecast. So growth has been downgraded from being above the recent historic average to being slightly below it, but nothing like this position here in 2009, and it's important to set that in context. And if we compare how forecasts look for this year with where we were in the start of the year, some of the most striking changes are for the United States. You can see that growth was forecast at the beginning of this year to be close to 3%. Now people are expecting somewhere around 1.5%. UK forecasts have been downgraded from round about over 2% to somewhere just over 1%. Japan has been hit by the earthquake and the tsunami. But actually, the euro area this year is expected to perform slightly better now than it was at the beginning of the year. Now that's because of the strong performance in Germany and the core European economies in the first half of this year. But when thinking about the euro area, it is worth recognising that the driving force of the euro area economies is not Greece, it's not Portugal, it's not Italy, it's Germany and the economies that border Germany. And Germany and the economies that border Germany account for a third of total UK exports. That core European market is also very significant for the UK economy. So growth forecasts have slipped, particularly in the US and the UK, and on average you can see that they're down a little bit from the start of the year. But if we look at what forecasters are now expecting for 2012, they're not expecting growth to continue to decelerate. If anything, in most economies they're expecting growth to actually pick up slightly, the main exception being the euro area, which is weakening in the second half of this year and early next year. And growth, yes, is not forecast to be very spectacular across the world economy, but the current consensus is that economies will continue to grow, albeit slowly in the West, and obviously stronger in places like China, India, and some of the other emerging markets. Why is global growth slowing, and why have forecasts been marked down? Three main reasons. First is that Asia-Pacific economies bounced back very strongly from the global recession in 2009, and many of those economies experienced inflationary problems, and policy was tightened, interest rates were raised, and other economic policies were tightened in China, India, even India raised interest rates just very recently, and in the Asia-Pacific region. And I think it's important when we look at the global economy to recognise that the Asia-Pacific region in particular and other emerging markets are now becoming an independent engine of world economic growth. They're not just something that piggybacks on the Western economies. There are fundamental changes taking place in the world economy such that already the 10 major economies in the Asia-Pacific region, including Japan and Australia, make up a larger share of world GDP than the United States and a larger share than the European Union. So already that centre of economic mass in the Asia-Pacific region is strong. And if you look at population trends, 50% of the world's population lives in Asia. So over a period of time, when global GDP tends to more closely reflect population distribution, we should expect the contribution of Asia to world GDP to continue to rise to closer to that 50% level. The big story of the first half of the 21st century is going to be the rise of China, India, and other Asian economies. So the fact that that source of momentum in the world economy has slowed somewhat has had a breaking influence on the world economy. In addition to that, there's been temporary disruption from the Japanese tsunami and the earthquake. But the other factor, and this is a slightly uncomfortable one for my former colleagues on the Monetary Policy Committee, is that relatively high inflation is squeezing disposable income and consumer spending. If you follow the news stories about why things may appear tough on the high street or for the consumer at the moment, consumers are saying we're facing higher energy bills, we're facing higher petrol prices, we're facing higher food prices, clothing prices went up very sharply in the last Consumer Prices Index. That in itself is the main constraint on consumer spending at the moment. Consumers are not spending much additional money year on year, but most of what they are spending is being absorbed by 4.5% inflation in the UK. And in the US, 3.5% inflation is having a similar effect. And this is perhaps something that hasn't been brought out enough in the discussion. Now, many of the factors contributing to this inflation are global factors such as energy and commodity prices, but they're still raising the cost of living for consumers and squeezing disposable incomes.